Hello, everyone. I am Dr. Johnna Montgomerie. I'm a professor at the University of British Columbia, way over in the other side of the world in Vancouver. I want to thank John McDonnell and the Claim the Future campaign for inviting me. And I also want to say hello to our guests, Grace, Danny, and Andrew. I'm very happy to be here, if just in video recording. I want to contribute today to the panel on Are we living in a permanent cost of living crisis by talking to you all about an issue that's very close to my heart, which is debt, and explain to you how debt is connected to the cost of living crisis that we're in today. So the main thing to understand about debt is that many people hear about the public debt. This is a big political issue. It's bigger, we need to cut it. What about the future? We're passing this on, to the next generation. All kinds of political and emotively charged messages around public debt. And that is important, but there's a whole other side that's never talked about, and that's private debt or household debt, which is, again, a huge part of what has changed over the past 30 years. The neoliberal state has come to rely on debt to drive growth. So they use cheap credit as a way to households via residential mortgages to drive growth. And this creates a whole new band of asset classes for corporations to invest in. And this has gone on for about 30 years. As in 2008, which is why the residential housing market was the key trigger to that crisis, is because of this growth model that is prevalent in the UK, the US, and other English-speaking countries. So it's really important to understand that that sort of political football that says, well, public debt is bad, is really one that only pertains to when public debt is used to provide welfare provision or income support for households, because what we've seen since 2008 is high public debt levels have only gone up, and that's perfectly acceptable because that money has been used to buy toxic assets and fund sort of financial market rescue packages, not just in 2008, but in response to Brexit and in 2020 in response to the pandemic. Now, that sort of bailout, rely on credit every day and then bail out the banks and the corporations intermittently when times get tough, has driven all kinds of inequality. And debt is what is configuring housing inequality, intergenerational inequality, gender inequality, as women work in the paid labor force, but also are required to do a lot of care work in the home and manage debts, family debts. But also the more traditional bread and butter forms of inequality, class-based and race-based inequality, have just been completely exacerbated by the dependence on debt over the past 30 years, and especially since 2008. So when we think about this wider moral economy in debt, what we realize is that many people who have debt, especially those who have problem debt, it's not just that they're struggling to pay for their mortgage, it's that they have energy debt. Now, these are formerly public utilities that were privatized, that have not only made all kinds of money borrowing themselves and giving dividends and shareholder returns, is that the customers themselves have gone into debt for water and energy that they in turn make profit off as well. We can also think of the debt that young people must take on if they don't have a family able to pay in cash for higher education. They have to go to the bank and get a loan to get what was previously a public service. We also have to think about how debt is used to replace what was a safety net. When there's one-off emergencies, illness, job loss, a baby is born. If there is no safety net or those programs have been cut, or childcare support, for example, families rely on debt in times of need. So when we think of that argument that debt is a real burden for the future, it's not just the government. And then when we think about corporate debt and how easily that just vanishes, is restructured and discharged whenever times are tough, and we compare that then to the discipline of private credit, which doesn't ask, is it too much? And what is the burden on our future generation? It doesn't say, what is the kind of pragmatic need we have to have less leveraged homes or households and individuals. Instead, private debt gets the discipline of, you must pay your debts. You took it on. It's your problem. But why this is an economic issue to do with the cost of living crisis is more interesting. Let's call it financial melancholia, because many people are in denial that we're in a Great Depression. A depression is a lack of investment, a lack of employment. And what we're in is a debt-soaked, a drowning in debt economy, gripped by financial melancholia. So a kind of depressive state. And that's because debt creates a temporal shift. Buy now, pay later. Now that seems very simple, but it means that you take money on that you must then every day until it's repaid, or every month till it's repaid, take your present day income and pay it for that past debt. That can be your mortgage, that can be your remortgage, that can be your line of credit, your auto loan, your consumer good loan for your computer or your cell phone. It can be your payday loan or your buy now, pay later app. All of these forms of borrowing are based on the same temporal shift, and they all connect you to the global financial system. If it's £50, £50,000, or £5 million, these loans connect every individual who has them and their families and their household to the global financial system. And what that means is that you must budget every month to take your present day income to meet your past debts. Now, that seems very simple, but we must remember all the debts from 2008 for the lenders have been restructured, refinanced, or bought out. There has been quantitative easing in 2016 in response to Brexit, and again in 2020, and yet households every month are having to pay from debts from then and that time. The loan they had to get in COVID, the time they had to remortgage during Brexit, or when they had the overvalued loan in 2008, all of those debts still stand, and every month households must pay, and interest rates have gone up. So that amount has gotten more expensive, a big crunch on incomes. So what you end up with is a future that looks exactly like today. I will work and work to pay my debt. That's called being a debt drone, just paying every month, but never expanding, growing, or renewing. This exacerbates social inequality, but importantly, it really perpetuates individual inequalities like anxiety, depression, and family breakdown. And without relief, there will only just be more of the same. So what I advocate for is debt restructuring, making credit a public good again. So if we imagine, first, let's get out of the way, the kind of sky is falling, chicken little. If we write off debts, the whole world will end, the sky will fall, everyone will lose morality, no one will ever lend again, and no one will ever feel they have to pay anything back again. And let's just get rid of all the exaggeration and instead look at the fact that, again, the government has routinely intervened to deal with all kinds of market panic, contagion, shock, and that has come at a huge expense to the public purse. That has brought on austerity and more cuts. And all I'm advocating for is that exact bailout package that was given to corporations instead be given to households. And that will improve the overall economic condition because it will give individuals access to their own money. All debt restructuring means is that the money that comes in doesn't automatically go to past debts. Instead, a smaller proportion is so that individuals and families have access to more of their present day income. But what does that look like? Well, debt cancellation really takes two main forms. One is tied to the interest rate and the long-term restructuring of a loan to reduce the interest rate. And the other has to do with the capital or the outstanding stock of loans. So if we imagine, first of all, that most households and individuals will have more than one loan, a mortgage, a remortgage, a line of credit, maybe a business loan, maybe a car loan, consumer loans, credit cards, maybe payday loans or other forms of fringe credit, maybe student loans as well. What the first part of restructuring the interest rate would mean would be to gather all of those loans together, which we all know have very different types of interest rates attached. Some will be, mortgage is very competitive, but student loans have ballooned, credit cards are 33%, overdraft can be even more. Overdraft is 33% and credit cards are 18%. So it's to take all of those loans, bundle them into one loan and offer a reduced interest rate and a state subsidized interest rate, as the corporations have had routinely since 2008. So that will create relief on household balance sheet and on the cost of living by reducing the amount of income going towards debt repayment. This will have immediate relief. Again, immediately. Imagine if outstanding debts for households were halved, the obligation they have to pay every month was halved. That would give an entire half of that payment will be then given to households to cope with the cost of living crisis. And again, much of the high cost of debt today comes down to the central bank's policy of raising interest rates. So it will combat that and say that, okay, private companies can pay more and other elements of the economy can pay more for credit, but the households who have bore the brunt since 2008, they can opt to have their loans restructured, just as this picking and choosing was done before. Now, the next element of debt cancellation is to reduce the stock of debt, the total amount outstanding. And that is done by simply the same way it was done in the bailouts, for the government to buy these distressed assets, for the government to buy these loans out and you become your lender and then just eliminate a portion of what is due. So that would eliminate the amount you're paying interest on. So if these went together, first you'd have the amount of outstanding debt from 80,000 down to 50,000 and the interest rate down from let's say 10% to 2%. And that together would create a kind of pushing down of the cost of debt that would relieve more income for individuals to spend. And you ask, how will we pay for it? And it's an easy question, easy answer. We will tax the wealth gains associated with the outstanding stock of private household debt. The more money made off these stocks, the higher the tax rate will be to fund the bailout of those that are over indebted. It is a way of creating balance. So just to wrap up, let's think of our alternative economic future in these terms. If debt for the past 30 years has been made with a stroke of a keyboard, if toxic assets, bad investments, bad financial products can just be bought back en masse by the government with the simple justification of we need to shore up over leveraged balance sheets, but corporate balance sheets in this case, then why can't private debt or the household balance sheet be restructured as easily as corporate debt and the corporate balance sheet is? And the answer is because of politics. Because politics says corporations cannot lose money. Corporations cannot have reductions in profitability. That it is citizens who must bear the cost of financial pain on their own. And when the entire system collapses, they must also absorb the losses of the financial system. This is unacceptable in a democratic society. And therefore, we need to look to our alternative future and say the cost of living crisis can be solved very easily in one particular way: reduce the amount that households are paying towards their debts, especially given that those debts have been bailed out multiple times since 2008 on the lender side and on the asset side. I hope that hasn't been too technical, and I hope that that has given food for thought for ways that we can get out of this crisis and really thinking about how debt is driving inequality and changing everyday life. I'd love to hear from you. If not now, then please get in touch over social media. I hope everybody enjoys this meeting. Thank you.